very excited to welcome you to our Sustainable Investment with Digital Assets and Tokenization panel this morning. We are joined by three brilliant people in the space: Darren Chu, CIO of Chancery Hill Ventures; Leong Keong, COO of DNZ Venture Global; and, as you've probably just seen, David Packham, founder and CEO of Chintai. So welcome, everyone.
Thank you.
Thanks for having us, Hugo.
No problem.
Good morning.
Would you want to introduce yourselves? Maybe Darren, if you don't mind going first.
Sure, yeah. I'm the CIO of Chancery Hill Ventures. We've set up a VCC here in Singapore to basically facilitate investments into a number of agri-tech ESG opportunities, which we've begun allocating. Starting off with an opportunity in Australia. So we have a regional focus of Australasia, primarily looking at projects where we're providing social benefits to farmers, to agricultural groups that are looking to reduce their carbon footprint, as well as producing products along the way that can make use of what normally would be deemed waste material. So that's kind of our focus within our first fund. And I guess aside from wearing that hat, I have another hat, which is basically running what's called Tradable Patterns, a startup of mine, which I've had now for almost 9 years. That's really geared more towards traders. That's a content production company where I produce technical analysis for futures, FX, and crypto traders. Thank you.
Maybe Keong, can you go next?
Yes, good morning or good afternoon, wherever you are. Basically, DNZ, we are in a business to do decarbonization because primarily in Southeast Asia, because this whole region is going towards carbon neutrality. And with decarbonization comes with all the associated costs. And that's where we come in to decarbonize and to raise funds by tokenization. And from the decarbonization, we can get a couple of revenue streams. One is the decrease of energy use. One is the carbon offset. You can do a carbon offset by reducing the carbon tax. And third possibility for some projects to generate carbon credits. And all these revenue streams will tokenize it through Chintai and in a platform so that all this it can fractionize it again so that it can reach a wider audience in the market and more investors can participate in the decarbonization effort. So when this will encourage more participants and encourage more people to decarbonize. This is basically our business concept.
Thank you, Keong. And David, I know you've just done a short presentation, but if anyone's just joined us, would you mind just introducing yourself as well?
Yep, sure. David Packham. So I'm a co-founder and CEO of Chintai, which, as I mentioned in the presentation, very much about regulated digital asset solutions for our partners as a SaaS tech company. My background, though, financial services, it was 20 years in both banking and asset management. So I was buy and sell side and spent quite a bit of time working on the tech side as well. So I also had the misfortune of spending the last 2 years of my career in reg compliance. So unfortunately, I understand that area as well.
Fantastic. So let's kick off today's panel. And David, just coming on to you straight away. Could you please help us understand, to begin with, the difference between digital assets and cryptocurrencies?
Yeah, so I would say the way to look at this is that cryptocurrencies and digital assets are subsets of the entire digital asset realm. So really what I would say is both crypto and regulated digital assets are digital assets, but crypto are completely unregulated. And what that means is that therefore they're operating on public blockchains with absolutely no controls realistically over how they operate. And what unfortunately that exposes everybody to is a huge number of potential opportunities with regards to what can be they can potentially participate in, and unfortunately with zero controls, and that leads to various things like scams, mis-selling, misrepresentation, theft, and a variety of other problems that we've seen unfold. So it's an interesting differentiator. Whereas by contrast, what are regulated digital assets? The vast majority of them are linked to real world assets, and that's a fundamental difference. So they are not just a token that could be quite abstract, like a governance token or a utility token that links to the usage of a network, for example. They are actually, for example, a real world asset, something tangible like real estate, ownership of a company. It could be a fund. It could be a bond, as we talked about. It could be carbon, et cetera, et cetera. Now, that is actually a much, much bigger potential market there. But with that goes hand in hand the needs and responsibilities to operate these things with controls that follow the global rules regarding that asset. And so this is where it's different, because the underlying structure of this is that regulated digital assets have to operate with these controls in place, and they have to operate with licensing. And that's really the big difference.
Okay, thank you. And coming back to Chintai, why do you choose Singapore, considering that the Chintai team is also based around the world, including San Francisco, Florida, Frankfurt, and Dubai?
Well, for me, I mean, my background, and yeah, you're absolutely right. And my background is that I spent the majority of my career working in London, because I'm also a Brit. And for me, it was a very interesting selection process. I was looking for a high quality global financial jurisdiction to apply for licensing. And I had to balance it between depth of access to capital markets and obviously reputation, as well as their openness to innovation and digital assets generally. So that really was a hard pass, therefore, on something like the US, because at the time, very conflicting signals as to whether or not they would be able to do anything. Hong Kong, there seemed to be a lot of political instability that was kicking off, so that ruled that one out. And then between London and Singapore, quite close actually. But for me, on assessment, I felt that Southeast Asia was just an absolute, a hotbed of innovation and growth in the entire area. They were very much leading in terms of the entire digital asset sector. And when I actually also looked at the regulator, they were providing the clearest signals with regards to a path towards how they were going to regulate these things. And overall, yeah, I have absolutely no regrets. They've been a fantastic partner and guide through this process for us, very supportive to help us get to where we are. And, I think that's reflecting in the fact that Singapore is such a hub and a leader in this area.
Fantastic. Thank you. Now we'll move on to Darren. So Darren, you are originally from Vancouver, Canada, and have worked around the world, especially in Southeast Asia. Could you tell us a bit more about Chancery Hill Ventures, your role as CIO, and the firm's involvement in a variable capital company structure in Singapore, please?
Yeah, sure. So we set up our first VCC structure just sometime last year with the objective of basically seeding the startups within the region, broadly speaking, so Australasia to start, but expanding beyond that to projects that we feel do have an ESG impact, in Europe and in the Americas. Now, we have an investment committee that basically has selected our top 10 startups that we would like to ideally seed. We've done our first investment into a Sydney-based company, which, as I alluded to earlier, they basically take waste material from, in the case of this startup, sugarcane plantations in Australia. So Australia, being one of the biggest sugar exporters, grows a lot of sugarcane. And so a lot of that waste material, it gets generally thrown away. It gets burned in some cases. And oftentimes it just doesn't get reused, but there's a lot of value to that waste material that some of the farmers, including indigenous farmers, over the decades and even centuries, depending on the vegetative material, have discovered. And so in the case of sugarcane, if you extract whatever sugar you can from it, whatever value that most people would deem exists within the sugarcane, namely from the juice and from the sugar within the juice, you can actually, with the remaining fibrous waste material, you can convert that into ethanol. So one of the startups based in Sydney, which we recently invested into, has actually pioneered, they've refined the process of converting the waste material from sugarcane specifically into ethanol. And of course, that gets mixed into conventional fuels like jet fuel. And so they specifically go after what's called the SAF, or Sustainable Aviation Fuel sector, Where in Australia, you can imagine there probably were subsidies at one point. Now, a lot of that's been weaned off, but a lot of these startups are now sustainable with their operations. So they've managed to, in the case of this startup that we invested into, it's actually gotten investment from Qantas recently after we invested into it. And so we're quite happy with that. We're really pleased that we're actually making an impact on not only the carbon footprint of the airlines that purchase this mix of jet fuel, conventional jet fuel, that is, with the biodiesel, but we're also impacting the farmers, the actual sugarcane growers. We're giving them an additional income stream through the sale of their waste material. We're taking it off their hands. So that also helps reduce whatever environmental pollution, littering that might occur, where in some regions of the world, you get a lot of this sugarcane just tossed into the rivers, into the ocean, and sometimes it gets buried into the soil, but it just doesn't decompose as readily, as quickly as you might expect. It's a pretty tough material. So we're trying to reduce the environmental impact on a few levels. So that's our first investment, and obviously down the road, we are expecting, hoping that startups like this one that we invest into will receive carbon credits for the reduction in the carbon footprint that they're helping facilitate. So it's a bit of an indirect process where if Qantas, for instance, decides to purchase 10% of its total fuel from a startup like this, then all of a sudden its total carbon footprint reduces by a certain percentage. Obviously, it's going to be a gradual process, but the intent for our fund, of course, is to allow any carbon credits which get certified for these startups that we invest into to appreciate over time, and for that benefit of potential capital appreciation to accrue through the holding within our VCC of such tokens. So those tokens, I ideally would be made available within a reasonable amount of time. Now, obviously, there is a bit of a queue that exists for getting such projects certified. There are loads of applicants for such certification of carbon credits right now, with the leading certifiers being Verra and Gold Standard, and that's kind of out of our hands. But the opportunity really is multifold, as you can see. So there is obviously the monetization, where the startups that we invest into, like the Sydney-based one, will appreciate based on the commercial strategy that I just described, where they're basically selling the biodiesel mix, in the case of this particular startup, to airlines like Qantas. So there is existing revenue coming in for such startups that we are eyeing. So we're not actually looking at R&D stage companies. We're looking at startup targets that actually already have commercial arrangements that are about to be signed, where the R&D tends to already have been done in the years past, and typically incubated at the university level, and in some cases with groups like A-Star. So we have our second target company here in Singapore, actually, which does exactly that. And they don't use sugarcane, but they take the waste material from coconut husk and from pineapple leaves. And what they do is, again, they're helping farmers arrive at an additional revenue stream for product waste material that they would typically toss. And by taking that waste material off their hands, once again, we're reducing whatever littering that might occur, where a lot of the waste product that I just mentioned, the pineapple leaves and the coconut husk, it just oftentimes gets burned, where you release carbon when you're burning such material. And you're, of course, also at times, depending on the region, depending on the farm, you're seeing that waste material ending up in rivers and in the ocean and so forth. So we're really excited about the Singapore project that we're about to invest into, where this startup has some kind of a partnership with A-Star, where the technology of harnessing the the fiber in a useful form from the pineapple leaves and the coconut husk. That R&D has been done by A-Star. And the startup that we're about to invest into basically then turns that fiber into clothing, like the shirts that you and I are wearing, or into a pair of shoes, or into even the mattresses, cushions, pillows, within a home, or within a car. You have your car seats. So all that can be manufactured with the additional ingredient coming naturally from what would all, in most cases have been just tossed. So, these are the kinds of projects we're looking for. But yeah, right now we're just really going out to investors, basically making available this opportunity to participate in, what we're very excited about. I think it's quite clear when any of you guys are out grocery shopping next time, what I would suggest is go to the disposable barbecue or picnic cutlery cup section and just take a look at what the plastic material is made of. More and more, you're going to find that it's made of biodegradable vegetative material. Oftentimes here in Singapore, you can find corn-based cups, for instance, but pretty soon you're going to see pineapple leaf or coconut husk created bioplastics, which I personally would very much purchase, even if it was a little more expensive, because given the biodegradable nature of those cups, and also where the source material is coming from, you can feel better about such purchases.
Brilliant. Thank you for that extensive insight into what you guys do. Keong, now moving on to you. You have extensive experience in China, Vietnam, Southeast Asia, and different management positions. Could you please share with us the conception of DNZ and your collaboration with Chintai, please?
Okay. I'm trained as an engineer, and for the last 20 years or so, I've been going around the region, project managing mainly industrial projects to the high energy users. And all these high energy users, they want to decarbonize because they are basically manufacturers too. They need to export to the European market, the US, to whatever they need to export, and they need to reduce the carbon footprint. But they just don't know how to reduce the carbon footprint. So that's where we come in to help them to reduce the carbon footprint by decarbonization their energy users. But then again, to decarbonize, you need funds. It's not cheap. Sometimes it's not cheap to decarbonize. So that's where we come in, look at it, individual projects, and see which are the projects that actually we can actually really decarbonize. And from there, we raise funds to help them decarbonize. And out of decarbonization, what we can get is the carbon credit. Like what Darren has mentioned, the startups essentially in Sydney has generated some carbon credit. This is basically what we are doing too, not from recycled materials, but decarbonization of industries. And with that, we will get the backlog now is to get the project registered with the carbon registries, like what Darren mentioned. Vera and Gold Standard, they are a whole huge backlog to get their review done and to get it approved. But once this is done, we can basically proceed with the projects, raise funds, and from there we will get the carbon credits, and we can reduce the energy users, and this is where our revenue streams is. So we are pretty exciting in Southeast Asia because Southeast Asia is the manufacturing hub, and especially Vietnam. In fact, I just got back from Vietnam 2 hours ago, and now in Singapore, and talking to industries and how they can decarbonize. So both Darren and I, we are in the same kind of probably the industry, and to help the world to be green. But our method is to decarbonize using by engineering and not by more and recycled materials. So that's basically where we are.
Okay, thank you very much. David, going back to you, Could you please help the audience to understand the importance of regulated digital assets and how this will support businesses like DNZ?
Well, actually, it's an interesting one because their use case is a little bit unusual because carbon currently sits as something of a grey area in terms of how it's viewed by regulators. Most of the time, they're actually viewed as a utility token, as in but certain other jurisdictions are already giving hints that this is actually a commodity and therefore will need to be, managed with regulations. Generally, the way we're talking to our partners about this is obviously if you're not having to incur the costs of going through the full reg compliance, great. We can facilitate that with Chintai Nexus, which is our more kind of DeFi facing side of the platform. But the moment of obviously, in theory, a regulator turns around and says, actually, we've now assessed this massively growing carbon market globally and have decided we are going to regulate this thing like a commodity. Anybody who's operating, anything like that on a public chain is going to have to migrate and face major problems with regards to how they then move to compliance. For our clients, that's not the case. They simply therefore switch on the on-chain rules engine and potentially migrate, obviously, the jurisdictional coverage, and it's a fairly seamless transition for them. So, it's an interesting one with regards to this. There is a blurring of the boundaries. But generally, regulated digital assets are exactly as the name implies. They have a degree of regulation that goes hand in hand with them. And it goes back to what I was saying earlier, that it really is all about the fact that they're real world asset linked. And therefore, they're conveying something a lot more substantive than hopium as their underlying business case. A lot of what we have typically seen in crypto is, this is my new layer one scaling token for a network. It's going to be the next big thing. It's going to be the next Ethereum. Buy it, and it's going to skyrocket. Whereas, as you're seeing, we're talking to very professional, high quality people running businesses with decades of experience. They got focus on things like trends like ESG and the moves towards decarbonization, and they're rightly looking to therefore build out their businesses and leverage the latest technology to add efficiencies. And that's really, as I've mentioned prior, what we're in the business here of facilitating and enabling them as partners to do. So I think it's really compelling for me because it's very hard for anybody who's even cynical of tokenization, when you actually run through these types of real world use cases, to not say, okay, there's a solid business case underlying this, the revenues are real, et cetera, et cetera. And that's where we're going through an education phase with a much wider range of clients globally, whether they're asset managers and banks or others in financial institutions, to help them understand that difference.
Thank you very much. And now probably on the other side of the support, Keong, for your business, how can a regulated digital assets platform like Chintai help to create a competitive advantage for your business?
Okay, in fact, when we first try to look for a tokenization platform like Chintai, the first thing we want to look at is we want to be in a regulated environment. Yeah, that's where Chintai came up top of the list, because of the regulations. We want to be really under MES regulation so that everything is clear and there is the authority is looking at us, making sure everything is done properly. And this gives a lot of confidence to the investors. And all our tokens are actually backed by backed by a carbon credit. Each token is backed by 1 ton of carbon credit, and these carbon credits are actually held by a custodian. So in a way, that is why the regulation makes the financial market more stable and is less subjected to manipulations. That is why we want to go to this MES regulated market.
Okay, great, thank you. Darren, and coming back to you, your focus is a lot on ESG. So I wanted to ask, how can investors evaluate the social and environmental impact of digital assets and tokenized securities and avoid greenwashing or impact washing?
Yeah, that's something that we're trying really hard to avoid. I mean, our whole reason for launching this fund is to not be one of those greenwashers out there, one of the many. Like the way I described how the startups that we have identified as investment targets operate is very much, I think, very much the way we want to go forward. not only could there be the benefit from carbon capture or reduction in carbon release through the burning of waste material, with some of these startups that we're funding, but we're also creating jobs, for the agricultural industry. We're not just helping the plantation owners or the operators of these farms, but the farmers themselves, right? And we're also reducing the kind of cleanup efforts that would have to be done, post, well, for lack of a better word, post littering. After a lot of these vegetative products are harvested, a lot of the waste material, it just, as I said, just gets released back into the river, into the environment, causing a negative impact. And so we're trying to, reduce that. Insofar as evaluating digital assets and their environmental impact, just as a sort of general rule of thumb, I would suggest to always, of course, try to find out, beyond, beyond what that, let's just say, positioning of an investment opportunity does for that investment's valuation, beyond what it can do for the fund that it sits within in the case of a stock, or what the shares would do for the individual shareholder. It's really sort of a multifaceted sort of set of criteria that we at Chancery Hill Ventures and together with GreenEMX are considering on each project. We're not just looking for financial gains here, and I think that's really sort of our own sort of internal decision set that we evaluate with. But I think one really, I mean, to sort of look at the amount of greenwashing that's happening out there, one really doesn't need to look much further than what happens, with some of the, I don't want to name any fund issuers, but, or any kind of index trackers, but there are loads of these index trackers, for ESG funds, or, for ESG minded fund managers to follow. And, a lot of those indices, a lot of these benchmarks will still contain what I think most people, never mind people in the industry, but just most people, if they were to look under the hood even a little bit with what a lot of these constituent companies within those indices are doing, they very quickly realize, oh, okay, well, that's very clever PR, that allowed this company to somehow get adopted by the, by whatever the index is. And so, we're obviously within Chancery Hill Ventures and GreenEMX. We're basically looking at private companies, though, right? Where we're not looking at listed equity type investments. And so, I guess that question isn't, the question of whether we would need to sort of decide whether an investment opportunity meets the criteria that I just described. I mean, that's probably a little, it's a different set of questions that we might ask ourselves, because obviously we're not reviewing what some index provider or some existing benchmark provider has sort of declared on a potential investment. So we have to do a lot more homework, I guess, with a lot of these, private unlisted companies, pre-IPO type situations. But obviously within sort of the other aspect of your question, how I would say on evaluating a digital asset for its impact on say electricity consumption, the blockchain that underpins the tokenizing of digital assets obviously will determine that. So we obviously are very much aware that certain blockchains are more progressive in that sense. The proof of stake networks that are out there within the layer 1 blockchain arena do address that through their scalability. through the lack of mining in the sort of traditional Bitcoin mining sense, the proof of work isn't what we would, at Chintai Hill Ventures is not, the kind of blockchain mining validation that we would be, investing into. So obviously, within our own fund that I've just described today, it's not a digital assets fund, right? I mean, first and foremost, we're more, think of us as more a private equity play where, we're trying to identify startups that have cash flows coming in pretty quickly, right? Where the technology is already refined. So the incorporation of digital assets, and I've kind of described how for our first fund would be in the form of carbon credits, right? So it's not like we're not a fund manager of digital assets per se. It should be thought of more as sort of an equity play with potential upside from the holdings of some carbon credits that we might get issued through some of the investments that we make.
Thank you. Thank you very much. Now, Keong, moving on to you. DNZ has big plans, and based on what I've seen on socials and online, I understand that the team is moving quite rapidly. Also, it's backed by renowned institutions in Singapore, including the prestigious Nanyang Technology University. If you could you please share us more on the excitement about tokenizations and digital assets you're experiencing in your conversations with clients, partners, or other stakeholders?
Okay, just let me clarify a bit. DNC, we do not have a direct link with NTU, the Nanyang Technological University. What we have is through our partner, Max Venture Global. So DNC and Max Venture Global, we have a joint venture company to provide the decarbonization. The decarbonization technology comes from Max Venture together with NTU. And that's where we come in to do the tokenization of the decarbonization effort. So that's our direct link, but not the direct link to the NTU. And we've been talking to a lot of industrialists. In fact, 3 weeks ago, we were in Thailand talking to the Federation of Thai Industries. And within the Federation of Thai Industry, they have 15,000 members. And they are very interested to listen to what we can do to help them accelerate and help them to decarbonize. And in coming together with the tokenization, this whole, we believe very strongly, this whole scheme can that's where we can have a lot more traction for a lot of industry to go decarbonization. And from there, we can generate carbon credits, tokenize it, and invite more participants to actually invest in the projects. So yes, they are very excited on the tokenization because the entry point for tokenization is lower than the traditional financing.
Okay, thank you. And David, coming back to you, based on what Keong and Darren have shared, can you share perhaps some examples of businesses leveraging blockchain technology to disrupt the financial industries, and how can investors tap into these opportunities?
Well, yeah, I mean, this is an interesting one because one of the things that goes hand in hand with regulated digital assets in most jurisdictions right now is restrictions on who can participate. So that's one of the unfortunate side effects of regulation, and particularly a process that's going hand in hand with regulators globally, which is getting them comfortable that these things are operating with sufficient control that they're then happy opening it up to retail level. So in terms of the types of things that we're seeing, I'll give you an example. The oil bond token issuance that we do, for example, will not be retail facing, unfortunately, at this stage. It's going to be very much, accredited investor, institutions and others. That's a natural byproduct of partly the types of investors who probably logically will want to take part in an issuance like that. But still, I mentioned just to kind of give you a little bit of a difference there versus others as to who can participate. There are a lot of different use cases, actually, with regards to this. I mean, in theory, anything that human beings use as a means of exchanging value could be tokenized in a variety of different ways. And we've seen that with NFTs, actually, which, while a lot of them might seem fairly strange experiments, particularly if you get into something like the enormous global gaming sector, digital assets that are linked and have some usage in a more tangible way there could be incredibly valuable, because they have actual tangible worth to a variety of different humans, and how we choose to value things is actually what determines value. It's not generally always necessarily linked to usage. It can be quite subjective as well. So really there are almost no limits beyond imagination. It could be content rights, intellectual property. It can be obviously then more tangible real world related assets like real estate, as we touched on. Another use case that's kind of linked to the green space generally is hydrogen. So we have a client not actually listed on the information I've followed through with. They've secured major backing from one of the world's largest energy providers, and they're going to be building out a tokenized hydrogen exchange, for example. Now, again, it's a completely different use case. It has a lot of commonalities from our perspective with carbon. Very, very similar. The tokenization of that and the handling of it have quite similar properties again. So for me, really, it's kind of hard to actually almost place limitations or boundaries on the answer to this question. You name a conventional asset class, it can be tokenized, and the chances are it can be done with greater efficiencies that make compelling sense for financial institutions. Really, the big challenge for the entire industry then links to getting the right participants on board to actually handle larger deal flow. Because, for example, who actually handles the issuance and servicing of large bonds in the multi-billions of dollars? Well, it's not a bunch of retail degens in crypto, right? It's actually global financial institutions with enormous deep capital market base who handle deal flow like this and have the underlying clients that fill them as part of things like pension funds and other things, right? So to do that requires a degree of building partnership networks globally, slowly migrating them on board to participate in those, and being able to add things like liquidity depth and distribution, and another big one will probably be custody too, which is to say, yes, in theory, we can self-custody over time various assets. The chances are, though, if you're a financial institution, you're going to want to put that and park that with a trusted digital asset custodian too. So these are all the challenges ahead, but really, there is no limitation in terms of what those asset classes are. And what's particularly exciting for us is we're generally able to service any of these asset classes we're coming across with some minor configuration changes and so on and so forth.
Brilliant. Thank you very much. I'm conscious of time, so I just have one last question for the three of you. Before we go, I know you probably have a lot on your plate and a lot that you want to do, but if you guys could name one thing each that you'll be focusing on this year, or a big project, it's not this year, but maybe next year. If you guys could provide that, maybe we'll start with Darren.
Yeah, well, so within Chancery Hill Ventures and our first VCC fund, we're looking to making a third investment, which I didn't describe yet, into another Australian-based project, which involves algae. So if you think about all the nutraceuticals out there, well, a lot of them are made with spirulina, other seaweed forms of algae. We've identified, through the help of these professors coming out of Australia, a unique strain that thrives well in the climate afforded by Australia. And so basically we're going to be we're going to be funding the growth of this algae, where production ends up being a rather high turnover. Once every 3 weeks or so, we'll be able to do a harvest. We'll be able to begin generating cash flows with each shipment of such byproducts coming out of the algae, which would be the protein and omega-3. And that basically gets sold to food manufacturers, as well as those who manufacture beauty care products. So you can imagine some of these algae strains being used for shampoo, for skincare, and obviously it could be used for things like fertilizer and also for livestock feed. And so there's a lot of excitement. We wanted to actually execute on this investment last year, but there were floods in Queensland, which was where we were hoping that the production would have initially began. But we've since, together with the startup, have realized that the best location will be in South Australia. So anyways, stay tuned, guys. That's what we're looking forward to.
Thank you very much, Darren. Moving on to you, Keong.
Well, within this year, we want to build up a team, make it stronger, and to also spend a bit more time in Thailand, because Thailand is a very exciting place for decarbonization. In fact, the Thai government will be announcing the carbon tax sometime second quarter of this year. So that's where we think there are a lot of tractions to decarbonize, and hopefully we'll get more business.
Fantastic. And then finally, David, I know you know with Chintai, I'm sure there's a plethora of opportunities, but if you could just name one that you're really excited about, please.
Well, it's more. I thought your question was more about what am I most focused on, and it's really short, concise, and simple. It's the clients and token holders. That's it. That's the top focus for the year ahead for us. We want to maximally deliver for them, and then we can continue building out what we've gotten by way of the services in response to usage, and yeah, the rest shall follow from there.
Fantastic. If only this panel could be 2 hours long. We have a lot of other questions, but I'd like to thank the three of you for joining us today. Thank you for joining us from Singapore, David from Frankfurt. And yeah, again, if anyone's watching on YouTube and wants to network with any three of them, just click in the link in the bio. And if you are already on CRISP, I'm sure you'll be able to find them in the networking zone and Chintai under the exhibitor zone. So thank you very much for joining, guys.
Thank you,
Thanks
everybody.
for having us.